In the intricate world of global politics, the Middle East, especially the Gulf region, has long stood as a pivotal crossroads, defined by its deep and enduring ties to the United States. For generations, this relationship has shaped not only the region's destiny, but also the broader balance of power across continents. The Gulf's strategic location, vast energy reserves, and political influence have made it a cornerstone of American foreign policy and a linchpin in the global order. For decades, oil and security have been the twin pillars cementing this partnership. The flow of Gulf oil fueled the engines of the world, while American military might offer a protective shield. This symbiotic relationship shaped global markets, stabilized energy prices, and reinforced the Gulf's role as a regional powerhouse. The handshake between Arab and American officials became a symbol of mutual benefit and trust, even as the world around them changed. But today, winds of change are blowing through the region. Speculation is swirling. Are Saudi Arabia and Qatar on the verge of joining BRICS, the powerful bloc of emerging economies? Could they be preparing to abandon the US dollar for energy trades, a move that would send shockwaves through the financial world? These questions are fueling intense debate among analysts, investors, and policymakers alike. If the Gulf states were to shift away from the dollar, it would shake the very foundations of the global financial system, a system that has been dominated by the greenback for nearly a century. The dollar's role as the world's reserve currency underpins international trade, investment, and economic stability. A move away from it could trigger a domino effect, impacting everything from oil prices to the strength of national economies. At the same time, Gulf states are increasingly looking eastward. They are forging new partnerships with China and India, two of the world's fastest-growing economies. Trade routes are shifting, investments are diversifying, and ambitious infrastructure projects are linking the Gulf to Asia like never before. These new economic avenues promise growth and opportunity, but also bring new challenges and uncertainties. The question now is whether this marks a true break from the United States, or simply a strategic recalibration. Are Gulf leaders seeking to redefine their alliances, or are they hedging their bets in an unpredictable world? The answer is complex, shaped by shifting interests, emerging threats, and the desire for greater autonomy on the global stage. To find answers, we must look past the headlines and examine the real forces shaping the Gulf's choices. Only by understanding the region's history, ambitions, and the pressures it faces can we truly grasp the significance of these whispers of change, and what they might mean for the future of the world. BRICS, originally Brazil, Russia, India, China, and later South Africa, emerged as a bloc for rising economies. Formed in the late 2000s, this group was designed to give a stronger voice to countries outside the traditional Western power structure. These nations, each with their own unique strengths and challenges, came together to push for a more balanced global order, one where emerging economies could shape the rules, not just follow them. Over the years, BRICS has sought more influence in global affairs, challenging the dominance of institutions like the IMF and World Bank. The bloc's leaders regularly meet to discuss issues ranging from trade and development to security and climate change, aiming to coordinate their positions and amplify their collective voice on the world stage. It's grown into a significant political and economic forum, even launching its own new development bank to fund infrastructure and development projects in member countries and beyond. This move was a clear signal. BRICS wants to offer an alternative to Western-led financial institutions, giving developing nations more options and greater leverage. For Gulf nations, joining BRICS would signal strategic autonomy and a seat at a new global table. It's an opportunity to diversify alliances, reduce dependence on traditional partners, and play a more active role in shaping the future of global governance. The bloc's recent expansion, including Egypt, Iran, and the UAE, shows its growing ambition. By welcoming new members from different regions, BRICS is evolving into a more inclusive and influential coalition, one that aspires to represent the interests of the global South. Yet BRICS is far from unified. Its members have clashing interests and rivalries, especially between India and China. These tensions can make it difficult to reach consensus on key issues, and sometimes threaten to undermine the group's effectiveness. For Saudi Arabia or Qatar, joining means entering a complex coalition, not a seamless alliance. Navigating the group's internal politics and competing agendas will require careful diplomacy and strategic calculation. The appeal is real, but so are the challenges. As BRICS grows, It offers new opportunities for its members, but also new risks and uncertainties. For any nation considering joining, the decision is as much about navigating complexity as it is about seeking influence. The U.S. Gulf Alliance began in the 1940s. American security in exchange for oil, sold exclusively in U.S. dollars. This petrodollar system made the dollar the world's reserve currency, giving Washington immense leverage. Gulf states recycled oil wealth into U.S. assets, deepening mutual dependence. But tensions have grown over U.S. policies in the region, shifting energy priorities, and questions about reliability. Gulf leaders now wonder if relying solely on the U.S. is wise in a changing world. Still, the petrodollar system remains a powerful bond, shaping both economies and geopolitics. The question is whether this foundation will endure as new options emerge. De-dollarization means reducing the U.S. dollar's dominance in global trade and finance. Countries seek alternatives, trading in local currencies, boosting euro or yuan reserves, or building new payment systems. The motivation is both economic and political, to avoid U.S.-driven shocks and the risk of sanctions. For Gulf states, accepting non-dollar payments for oil would directly challenge the petrodollar system. But such a move risks economic instability and could anger the U.S., threatening their dollar-based wealth. The dilemma: diversify for autonomy or stick with the stability of the dollar. Gulf leaders must weigh the risks of change against the costs of staying the course. Despite talk of a split, U.S. Gulf ties are deepening, especially in technology and defense. In 2025, the U.S. signed trillion-dollar deals with Saudi Arabia, the UAE, and Qatar, focused on AI, cloud computing, and advanced defense, all anchored in the dollar. The UAE's massive AI campus and new security regulations show continued American influence. Gulf leaders still rely on U.S. oversight and technology, even as they diversify investments. Even financial diversification, like Gulf funds investing in Bitcoin, Volkswagen Dibin and Dowdery, Einerdrin in Dan, Abastein, Dinderkander, Ayavs, Rusindenary, and Benzern. Through U.S. regulated products. The reality: the Gulf is embracing new opportunities, but within the framework of its U.S. partnership. This is recalibration, not rupture. So, are Saudi Arabia and Qatar really joining BRICS and ditching the dollar? Not quite yet. Both have shown interest in the BRICS group, but so far only the UAE has formalized its membership. Saudi Arabia remains cautious and is still weighing its options. Their economies are deeply tied to the dollar. Currencies pegged, assets held, and contracts priced in it, making any sudden shift risky. Abandoning the dollar would risk financial chaos and instability for these nations. Instead, Gulf states are diversifying partners, engaging with China, India, and Russia, while still maintaining strong U.S. ties. This is not about replacing the U.S. entirely, but supplementing it with new relationships and opportunities. The narrative of a dramatic break is an oversimplification of a much more complex situation. The reality is strategic multi-alignment and careful balancing of interests. The Gulf's Diplomatic Balancing Act reflects a significant shift toward a multipolar world, where influence is more widely distributed. Blocs like BRICS are rising, giving nations more options and greater leverage on the global stage than ever before. The dollar will likely remain dominant, but regional currency blocs and local trade deals are rapidly on the rise. The U.S. must adapt, moving from dictating terms to building partnerships based on mutual benefit and shared interests. For the Gulf, the future means balancing deep U.S. ties with growing Eastern opportunities and new alliances. Their aim, ultimately, is to be indispensable partners to all, not to choose sides in global rivalries. In this new order, flexibility and diversification are the keys to long-term security and prosperity for the region. The Gulf's relationship with BRICS and the dollar is evolving, not erupting. This transformation is subtle, marked by careful recalibration rather than dramatic upheaval. The region's leaders are acutely aware of the stakes, and they are choosing a path of gradual adaptation, not abrupt change. Sensational headlines often miss the nuance. Gulf states are weaving new partnerships without severing old ones. They are engaging with emerging economies, exploring new trade routes, and investing in future technologies, all while maintaining their established alliances. This is not a story of breaking away, but of expanding horizons and building bridges. The U.S. remains the region's key security and technology partner, and the dollar is still central to financial stability. American influence is deeply woven into the Gulf's infrastructure. from defense systems to digital innovation. The economic and strategic ties are robust, providing a foundation that Gulf states are not eager to abandon. But the Gulf is more confident, ambitious, and eager to diversify than ever before. Visionary leaders are investing in education, renewable energy, and high-tech industries, aiming to future-proof their economies. There's a palpable sense of momentum as cities rise from the desert and new opportunities take shape. The real story is not about choosing between the US and BRICS, but about balancing both in a changing world. Gulf states are mastering the art of strategic flexibility, leveraging their unique position at the crossroads of East and West. They are determined to benefit from all sides, without being forced into binary choices. The sands of global power are shifting gradually, not suddenly. Change here is measured in decades, not days. The Gulf's leaders are patient, watching the world's tectonic plates move and positioning themselves to thrive no matter which way the wind blows. The Gulf's strategy is clear: become a power in its own right, navigating the currents of a multipolar era with confidence and vision. In this landscape, adaptability is the greatest strength, and the Gulf is determined to shape its own destiny as the world changes around it.